All right, welcome to the weekly roundup. I'm Scott, that's Ben, and we
Hello.
have a new member. Ben, why don't you let's kick it off by introducing our newest member of the Hart Investment Group.
Well, we're excited to have Renad join our team. Renad, maybe you can tell us about yourself. Certainly, I'll tell afterwards. We can talk a little bit about what you're going to do here, but maybe you can tell us a little bit about your background, who you are, where you're from, and then we can go from there.
Okay, so hi everyone. My name's Renad. I just joined the Hart Investment Group as a wealth associate. I just graduated from Carleton University from financial economics. I have a lot of banking experience as a teller and as a data analyst, so I'm excited to learn more in my new position.
Awesome, fantastic. Well, we're excited to have you here. It's been a great 5 days so far. That's off to a good start. But if anybody needs anything, certainly feel free to reach out to Renad, and she's happy to have a chat if you need to book a meeting, anything like that. But certainly she'll be reaching out to you at some point in the not too distant future. But wanted to have everybody, see your face to your name, so when they call, here we go. They know who you are.
It's me.
Exactly. That's perfect. I think that's great, and
Okay.
maybe we'll jump into the next part.
Perfect.
Good.
Okay, let's move on to what's been happening in the world this week. Ben, why don't you give us a kind of a brief overview and we'll go from there.
Yeah, sure, sounds good. Well, this week we had the U.S. Central Bank raise rates, which what appears for the final time, at least in this hiking cycle. Lots of attention towards it, but really we started the week with the regional banks coming under pressure. First Republic officially went bankrupt last weekend, and then since then we've had a slew of other regionals come under pressure, up and down, super volatile. Western Alliance was down, I think 80% this week, and then rallied back 50 today. So huge swings in the regional banking space. From the people I follow and read, it seems like there's a high probability that some of these go bankrupt over the weekend. So continue to follow that space pretty closely to see what's happening. But yeah, I mean, lots happening, but the undercurrent of the financial systems continues under pressure. I was slightly surprised to see them raise rates, but they raised because the economic data said that they should. So that lots going on still.
Great. So still in quad 4.
Yeah. So quad 4, for those who don't know what that is, it's growth and inflation slowing together. So Q2 data was terrible. Certainly looks like recessionary data. And so I think the question and the thing that we've always been trying to think about is how does this play out into asset prices? And so we had a quad 4 week where gold did well, bonds did well, and for the most part. And the one thing that we've started to see a little bit in some of these earnings is that these tech stocks that revised their earnings down last year have started to pop when they release their numbers, even though their numbers are horrible for the quarter. Forward-looking guidance is a lot better than it was. So we saw Facebook, we saw Shopify, we saw Coinbase, we saw OpenText, all those companies that had done down revisions in the October-November last year came out with slightly less bad numbers, and so their stocks were jumping 10, 15, 20% this week. So we're positioned with some of those, but yeah, we're still in the quad 4 setup.
Okay. Any material changes in portfolios this week, or anything you're watching specifically?
So just as we start to think about what the other side of this looks like, always starting to do that, thinking about some of the commodities that have been destroyed. So we had copper and nat gas and some of the other base metals are hitting kind of 52-week lows here. So started to think about some of those names. Haven't added them yet, but like Nutrient and Freeport McMoran and things like that are starting to come on the radar now. as we look on the other side of this. But no, generally staying with what we have. Happy to see some of those stocks pop, which we bought Meta last year. So that's up about 50% from where we bought. So no changes yet, but starting to think about positioning for as things start to change.
Awesome. So
Yeah.
what do you got for us for the charts department today?
Always got a few.
Ben's charts. How many do you have for us today?
I think I got 4, maybe 4-ish.
Good.
Yeah.
Seems reasonable. Then.
Yeah.
Good for you.
I try to be.
Appreciate it.
Yeah. So as we look at, I always like to put this up just to see, what's happened in the banking space. I remember 2008 quite clearly, and so Washington Mutual is probably the one that sticks out the most in my mind because the press and the media, it was effectively this. There's no way that this company can go bankrupt. They're too big, too successful. They've never had a default in their mortgage book, etc. And so Washington Mutual is still the biggest, but First Republic this week was the second biggest. Silicon Valley Bank, which was a couple of weeks ago, was the third biggest. Signature Bank was the fourth biggest, and that was a month ago. So, we're seeing some serious pressure in the financial system. And so I still believe that the right place to be is having government bonds, some US dollars, and some duration is going to pay off, because I think this gets a little bit worse in the financial space before it gets better, because really FDIC can't support all of this. And the FDIC is the Deposit Insurance Corporation in the US. So that insures deposits in your bank account. Their assets are about 120 billion. They've already absorbed something in the neighborhood of 60 to 70 billion, we'll say, with the ones that have just gone bankrupt now. So I really don't think they can backstop all of this, and they need to figure out a way to kind of stem the losses that are happening in the banks. The other thing that we want to pay attention to, and why I think you want to own bonds, is this is the market's kind of expectation for where rates go over the next, we'll say, 18 24 months. And so where we sit today effectively is in this range. And if your view is the economy slows and inflation slows together, this is kind of the forward path for the US central bank. This never happens though. This is a smooth curve. When you start to cutting cycle, it happens quite quickly within a very quick period of time. Historically, it's taken 5 months from pause to cut. But this is presently what the market's pricing in, is rates a lot lower in the next 12 months. So as I comment on, these are some of the things that came up this week, is just, as a continued push for electric vehicles and renewable energies and such, all those inputs that go into them, it would be base metals, and copper is probably the biggest one, because if you're building an electric car, copper takes effectively 4 times the amount of the electric cars take about 4 times the amount of copper as a combustion engine. So, copper is a major input that hasn't been a big find in a long time. So as we see these base metals start to hit low levels with inventory super low, that's where these opportunities start to present themselves. Another example where copper is used, so offshore wind. If we look at the chart here, offshore wind requires 730% more copper than the equivalent natural gas facility. So, if we look at what's happened here, I think long-term copper and some of the other base metals like lithium and graphite continue to be attractive. So, as the market starts to bottom, the economy starts to bottom, this presents really some opportunities. So I'd be watching this quite closely right now. This has been an ongoing debate too about the working remotely. And if we look at what's potentially going to happen in 2024, there's something in the neighborhood of $1 trillion in commercial mortgages coming due in the US. Canada has similar statistics, not at the same scale, of course, but you have huge commercial real estate mortgages renewing next year. And then you have on top of that, this issue, which is people are working remotely. And as we saw most recently in Canada here with the government, the government, this was one of the big sticking issues. Employees didn't want to go back to work full time. So while this may migrate slightly lower over time, I don't think this level that we saw coming into COVID is going to be anything that we approach anytime soon. So there is an issue in the commercial real estate industry. And we saw some of the big pension funds, which own most of these assets, start to mark down their books with CalPERS is one of the biggest pensions in the US, which is the California pension. And they marked down the real estate book for the first time in 20 years. So this is something that we'll continue to watch as a potential risk in the market. This is the last one, I promise. I always like to look back and see what's happened over different time frames. Over the last little while, I've spoken a little bit about 2015, 2018, and then of course 2022. And so, coming into the end of last year, I drew a lot of comparisons to 2018, where the central bank tightened too much into the end of 2018. Markets dropped about 25% into Christmas Day. And then you had Powell start to change direction and talk about quantitative easing, cutting rates. And then what we saw for the next 2.5 years was really a rip-roaring market on the back of that. So as we line up to where we are today, out of the gate at least, we've seen kind of a risk-on move and assets start to perform quite well. So, we are continually lining up with that as the view. And so I'd continue to watch this quite closely.
It's always one of my favorite charts. Christmas tree chart is what I call it.
Yeah, exactly.
Christmas tree chart.
Yeah.
Okay, good stuff. If anybody has any questions, obviously just click the Q&A button at the bottom. If not, what's in the crystal ball? What are we looking to for next week?
The big kind of risk on day here, lots of assets traded up. So I'd be looking to see if this continues through here, or if what I think more likely is we see a further correction in the banks, in particular in the US. And so this weekend, with the view that I think probably a few more of the regionals go down, be watching that quite closely, and continue to watch the economic data. But this week, with the central bank effectively going on pause in the US, it's really a time clock to see when they go to the other direction, which is cutting rates. But they probably need further weakness in some of the data. The jobs numbers was a little bit better today than expected. So that'll keep them on the sidelines for a little bit. But yeah, continue to watch where we are. And as I say, commodities are starting to get more attractive. So I'd be looking at some of those individual names like Nutrien and such as potential entry points.
Great. Okay, any last words before we kick off this beautiful weekend?
I think that's it for me.
That's it.
That's
Do you
it.
have any last words of wisdom? Just thumbs up. Okay, we'll take it. Well, great first show there, Renaud. We're excited to have you as part of the team. This is a good little trio we have going here, right? I like it.
I'll be here all week.
Yeah, exactly. Well, and next week. All right, everybody, have a great weekend, and we'll talk to you next week.
Sounds good. Thanks. Take care.
Bye.
Bye.